Good day and welcome to the Thoratec Corporation Earnings Conference Call. Today's conference is being recorded. At this time, I would like to turn the conference over to Neil Meyer. Please go ahead, sir.
Good afternoon, and thank you for joining us today. With me is Keith Grossman, President and Chief Executive Officer, and Taylor Harris, Vice President and Chief Financial Officer. Taylor will begin the call today with a review of the financial results for the second quarter, and Keith will discuss recent business trends. As a reminder, we won't be taking any Q&A on today's call and are not able to discuss any matters related to the announcement of our definitive agreement to be acquired. Before turning the call over to Taylor, I want to remind you that during the course of today's conference call, we may make projections or other forward-looking statements that are subject to the safe harbor provisions of the securities laws regarding future events or the financial performance of the company. We caution you that these statements are only predictions and that actual results may differ materially. We also alert you to the risks contained in the documents we file with the Securities and Exchange Commission, such as our annual and quarterly reports on Forms 10-K and 10-Q. We do not undertake any obligation to update or correct any forward-looking statements. I also want to remind you that non-GAAP net income excludes the tax-affected impact of amortization and impairment of intangible assets, share-based compensation expense, and acquisition-related expenses, including transaction costs, inventory fair market adjustments, and contingent consideration adjustments. You can find a reconciliation between our GAAP and non-GAAP results in our earnings press release at www.thoratec.com. Taylor?
Thank you, Neil. Thoratec generated revenues of $128.7 million during the second quarter, an increase of 9% compared with $118.1 million in the second quarter of 2014. The strong second quarter performance represented a notable return to growth. Revenue from HeartMate products increased 11% compared with the prior year, while Centromag acute surgical product revenues grew by 2%. PVAD revenues declined materially, and this legacy product line represented less than 1% of consolidated revenue during the quarter. In terms of geographic breakdown, U.S. revenues increased 11% compared with the second quarter of last year, while international revenues increased by 2%, for a total company growth rate of 9%. On a constant currency basis, total company revenue growth was nearly 12% over prior year, and international growth was 16%. In Europe specifically, constant currency revenue growth was 20%. During the second quarter, we sold 1,035 HeartMate pumps worldwide, an increase of 20% compared with the second quarter of 2014. This total includes 31 HeartMate 3 units implanted in the Momentum 3 U.S. clinical trial. We saw broad strength in worldwide demand for our HeartMate products during the quarter, supported by an acceleration in worldwide market growth for chronic MCS pumps of approximately 18%, as the VAD market reached a new record level of quarterly units. We generated double-digit volume growth in both our U.S. and international businesses, including U.S. HeartMate pump unit growth of 18% and international growth of 27% compared with last year. All major regions experienced growth, including Japan, where we sold 15 units as implant rates began to rise for the first time in several quarters. Revenues from our Centromag acute surgical product line were $13.4 million during the second quarter, an increase of 2% compared with the prior year, and growth of 8% on a constant currency basis. Worldwide Centromag volume growth of 17% remained robust, although was partially offset by lower non-pump revenue in this product line related to fewer new customer additions in the current period. Non-GAAP gross margin was 70%, compared with 72.4% during the second quarter of 2014. This decline in gross margin related primarily to manufacturing variances, along with the impact of foreign exchange. Non-GAAP operating expenses totaled $61.3 million in the period, compared with $50.3 million in the previous year. Higher personnel-related costs, combined with increased spending on clinical trials associated with the ramp-up of our enrollment activity, along with higher legal costs, contributed to the increase in overall operating expenses. The non-GAAP effective tax rate was 29.9%, compared to 32% during the second quarter of 2014. A higher mix of income generated in lower tax rate jurisdictions drove the reduction in our tax rate. Non-GAAP earnings per diluted share were 37 cents, compared with 43 cents in the prior year. Shares outstanding were 55.3 million in the second quarter of 2015, down from 57.2 million in the prior year due to share repurchase activity over the past 12 months. We used approximately $5 million to repurchase stock during the second quarter, and we ended the period with $278 million of cash and investments. We've currently stopped share repurchase activity due to the announcement of our pending transaction. As stated in our press release, we are not providing financial guidance for the remainder of 2015. However, we are very pleased with our recent performance, and I'm proud of our accomplishments to date. I'll now turn the call over to Keith for a discussion of trends in the quarter, as well as an update on our product pipeline. Keith?
Thanks, Taylor. Our team's efforts helped to create very solid market growth during the quarter, while at the same time, we were also quite pleased with our competitive performance, by the way, particularly in the U.S. We believe these improved trends are the result of multiple factors, including the moderation of clinical concerns that surfaced some 18 months or so ago, a favorable impact from the many growth-oriented initiatives our new management team has been working to implement in recent months and quarters, and greater engagement with our customers as we work with them to plan for commercial introduction or trial enrollment of next-generation products. Increased utilization or implant rates for our devices further reflect the confidence held by clinicians on a worldwide basis for the value of our products, which we believe continues to be enhanced by some of the recently published clinical data. In terms of competitive dynamics and our positioning during the quarter, we're certainly pleased to see that our share position improved in the U.S., which of course is the largest market for LVAD products by a wide margin. While it's hard to quantify the contributors to share gains with any great certainty, we believe recent shifts primarily reflect the hard work of our team to firmly reestablish Thoratec as a company of choice with the products of choice within our industry. We've long believed in clinical outcomes as the primary value driver in this business, and our efforts to further improve results with the HeartMate 2, as reflected in our PREVENT or roadmap studies, or even with our product's performance in our competitors' trials, resonate strongly with our customers and with patients, and is a compelling aspect of the Thoratec value proposition. Moreover, we've focused our resources in the field on the things that matter most so we can offer the best-in-class support that our customers value and, frankly, have come to expect from us. Importantly, our gains are broad-based, and they're not concentrated in any specific customer or segment of the market. On the topic of our product pipeline, we continue to make great progress with advancing each of our near-term clinical programs toward commercialization. Starting with HeartMate 3 in Europe, we've passed the 6-month follow-up period for all the patients enrolled in the CE Mark trial, and we completed the data submission to our notified body for the CE Mark in early July. The abstract for this important data set has been accepted as a late-breaking clinical trial at the Heart Failure Society of America Conference, or HFSA, and is scheduled for presentation on September 27th. At the EACTS conference held in Europe the following week, there will be another presentation looking at different aspects of the same HeartMate 3 CE Mark data set. In addition, we recently announced the start of a HeartMate 3 less invasive surgical study in Europe. This is a small series of cases that will attempt to demonstrate the surgical flexibility of HeartMate 3 and provide some real-world experience with the technique prior to its commercial approval. Our focus is, of course, increasingly on CE Mark approval and our European launch, which is still expected in the fourth quarter. At the same time, we also continue to make progress with HeartMate 3 in the U.S. Our IDE trial, called Momentum 3, has enrolled a total of 138 patients as of yesterday. We have 33 of the expected 60 sites now activated, and among those centers who are fully activated, we're enjoying a rapid enrollment pace. We're quickly progressing toward the 294 patients required for our short-term data set and believe that we'll be able to fully enroll both the short-term and long-term primary cohorts of Momentum 3 in a very efficient time frame as we continue to bring the remaining centers online over these coming few months. Now turning to PHP, where we've also had some notable accomplishments in recent months. The most significant among them is clearly the CE Mark approval, which we obtained in July. And it's really gratifying as an organization to reach this point after years of hard work from our PHP team to develop this product. Commercial sales, of course, haven't yet started, and we should begin in a limited and phased rollout sometime later in this year and into 2016. And while Europe is currently a relatively small and undeveloped market for catheter-based pumps, We're eager to start accumulating additional real-world experience with PHP while we learn how to best develop this emerging product category. In the meantime, we're close to completing enrollment of the entire patient cohort that will make up the full CE Mark trial and plan to present this data a little bit later in the year. In the U.S., we received unconditional approval from the FDA for our SHIELD II trial examining PHP in high-risk PCI cases, and we still expect to start enrollment in this study sometime during the third quarter. In addition to the clinical trial progress with PHP, the device was also featured in a live high-risk PCI case performed in May during the EuroPCR conference, which was held in Paris. This case successfully demonstrated that PHP can provide hemodynamic stability even in very complex revascularization procedures. PHP offered consistent support throughout this procedure, even though the live case actually turned out to be more challenging than originally anticipated by the clinical staff. This case helps to validate both the performance of PHP and we think its clinical utility in the high-risk PCI setting. In closing, the second quarter was a very strong one, highlighted by reestablishment of constant currency revenue growth well into the double digits and at a level, frankly, more in line with our long-term historical growth rates in this business. It's precisely this attractive growth profile that led to the recently announced agreement with St. Jude Medical. And by combining with a larger medical device company that can bring greater resources and expanded global footprint, we'll be able to reach vastly more patients with our products, we think, at an accelerated rate. This is an exciting and really extraordinary time for Thoratec, which is evident by the energy we see throughout the field. And lastly, because this might be the final Thoratec earnings call as an independent public company, I want to take a moment to thank our customers, our patients, our board of directors, and our investors for their many years of patience and tireless efforts that have helped us reach this point as a company, as a therapy, and as an industry. And I particularly want to thank our employees. Thoratec was founded almost 40 years ago on the belief that the epidemic of end-stage heart failure need not be the death sentence it had become. The path we've traveled since has been, at turns, both harder and longer than anyone might have predicted. But along the way, we collected so many bright and passionate people who became committed to our mission and have worked shoulder to shoulder with our clinicians to see the realization of that mission. As a result of their dedication, tens of thousands of lives have been saved, extended, and a great deal of value has been created for our shareholders. And I consider myself very privileged to have been associated with Thoratec for almost 2 decades now as either CEO or director and to have led this team. So while one very successful chapter of our corporate history is coming to a close, the next, even more exciting chapter is about to be written. And after all that we've accomplished as an independent company, I'm excited as I've ever been about our future opportunities, including the potential for our products as a centerpiece offering among a broader continuum of care for heart failure patients. This, combined with the coming improvement in our own technology offerings, I think will mark the beginning of LVAD therapy's emergence as mainstream late-stage heart failure therapy. So thank you again for supporting Thoratec and our mission, and thank you for joining us here today. Operator, this concludes our call.
Thank you, and once again, that does conclude today's call, and we appreciate your participation.